Good morning, everyone. My name is Julius Kalcevich. I'm the CFO of iAnthus Capital Holdings. There we go. Just our standard disclaimer. Just a little bit about who we are as a company. So we're a multi-state operator. We're based in 11 states. We have 121 potential customers in those states that we're in. The licenses that we now have across our platform on the dispensary side, 68 dispensary licenses. We have 600,000 square feet of cultivation space, and our market cap right now is about $1.1 billion on a fully diluted basis. So just a little bit more about the company, or what's in our DNA. We've always had this strong view and philosophy that size matters tremendously in this space. The 11 states that we're in, and we're focused on many more than just the 11. There's some must-have states that we continue to focus on. The growth opportunity right now in cannabis is obviously tremendous. Anyone can see just by the size of this conference the continued attention that the industry is getting. We've always been focused on having a leading capital markets position and an M&A focus. Obviously, as a public company, we were the first guys to go public in Canada as a multi-state operator. We continue to believe that growing our shareholder base, especially as we start to move into the US and grow our shareholder base, will be attractive and valuable for all of our shareholders. And as well, we look from an M&A perspective that there is very strongly a land grab that's going on in the US, that you have to be able to win licenses, but you have to be able to acquire them as well. And we've wanted to make sure, lastly, on the management side, that we've assembled a team that are proven brand builders, because we see brand as one of the critical things that is going to be a driver in this industry. So there's three key successes in the US cannabis space, and that since day one we've been focused on. The ability to acquire footprint, that's whether through M&A or winning licenses, ability to fund your growth. Building out these licenses, building out a vertically integrated operation can be expensive. You need to make sure you are always focused on your balance sheet. And lastly, a team that can replicate. You have to produce the same product in 11 states. It has to have the same formulation. If you're going to build a consistent brand, that's obviously something critically important. Oops, hold on. Okay, excuse me. Okay, in terms of the U.S. market, so a lot of people sort of look at what's happening at the federal level in the U.S., that they still see that it's federally illegal. And then when you obviously start looking on a state-by-state basis, there's actually 92% of the states that are out there that it is legal at the state level. And you also look at, for instance, what the market size is. Obviously, there's a tremendous focus on what's happened in Canada, but you look at what's actually happening in the U.S. Right now, that the market size in the U.S. and legal markets is almost $10 billion, and you see that tremendous growth going up to about $75 billion over the next couple years. That's not necessarily just growing the business, that's states coming online, starting to see states as they move from medical into recreational. One thing we also like to talk about, and this is more of a philosophical view of how do you get your mind around what Canopy has just done with Acreage? How do you get your mind around the massive deal that Constellation does with Canopy, or Molson Coors getting into the sector and paying these billions of dollars to get in? And this is how we specifically look at it, and I think this is how a lot of the big players also look at it. Cannabis usage right now in the US is around 11%. Well, what happens if that starts to look a little bit more like a beer or the alcohol industry? And that's about a usage rate of about 55%. When you start thinking about applications of cannabis, whether it's CBD or THC, and that starts to find its way into different products, you see how that market expands. You then look at that $55 billion potential legal market. That's right now the black market and the legal market in the US. Well, imagine if there is a higher usage rate. You start looking at a $200 billion market value. And then lastly, a branded product company can trade anywhere from 3 to 5 times revenue. You take that market size, and that's how you start getting to these monstrous amounts of what the actual market value is, and how the large CPG companies start to look broadly at the industry. I think one of the core things that we tie it together as a multi-state operator is you look at some of these big states. These are states where are sort of must-have for anyone anyone who's going to build a national platform. Well, there's 10 licenses in New York, and there's 14 in Florida, and there's 12 in New Jersey. And if you're going to be a national player, you need to be in any one of them. And you're starting to see how this industry is taking shape. There's going to be 8 or 10 big players out there that are building out this franchise, and you start seeing how large this potential market value out there can be. So in the states that we're in, we recently acquired a very large company, MPX, similar size to us, doubled our footprint. We're now in 11 states. We have 2 super regional footprints, one on the East Coast, which are more limited license, and then on the West Coast, places like Arizona, where we have a leading market share. Nevada, we're continuing to build out our various facilities. On the M&A front, so if we're in 11 states, we've got into about 11 of them through M&A. We've got into 3 of them through winning licenses. And as we look forward and we want to continue to build our footprint, we have the operational chops and the M&A ability to do it. Our 2 teams, MPX, which we acquired, and ourselves, we've done almost 18 transactions since we've both been public companies. And that's going to be critical as we continue to build out our platform. On the capital markets side, we were the first company to go public. We pioneered a U.S. cannabis company listing on a Canadian exchange. It will be 3 years in September since we've been public. We've continued to build our shareholder base. Right now, we have about 60,000 shareholders in the U.S. and Canada and Europe. We also are constantly focused on our float. That's obviously a technical aspect, but as you start looking at attracting U.S. institutional investors, they want to get into a liquid company. They want to be able to build a position, and you need a large and strong float to be able to do it. In terms of the management team, our CEO, Hadley Ford, he's a former Goldman Sachs banker, a longstanding entrepreneur, built a very large healthcare cancer treatment company in the past. Pat Tiernan, who leads our operational team, he was the COO at Stone Brewery, one of the largest and most successful craft beer companies in the US. That's also critically important as you're starting to replicate and build brands across your entire platform. The image that's coming, Neil Calvespert, he's our CMO. He was the CMO at Monster Energy, built one of the largest beverage companies. Obviously, you guys are all familiar with Monster Energy. He took that company from $1 billion to $3 billion of revenue and launched dozens of new products. That's the same sort of focus we want to bring within iAnthus, and that's what we're doing right now. Proven ability to scale quickly. Our company came together about 4 years ago. Compared to some of our peers that had started 8, 9, 10 years ago, there's been a huge focus on making sure that we can scale and scale with some of our peers. If I look back just a year and a half ago, we were in 4 states. We're now in 11. We've been able to build up our dispensary licenses, our cultivation licenses. That number, 450 people, that's already dated. There's now 520 of us. 2018, we posted as a combined company $50 million US of revenue, and that's continuing to tick up on a month-by-month basis. We opened 8 dispensaries just in the last 6 months, and you're going to see more continue to be open. In terms of the stores that we have open right now, we have 21 stores across our 11 states. By the end of this year, it should be more like 45 to 50 stores. We're going to be opening a couple more in Q2, and then through the back half of the year, especially in Florida, New York, Nevada, New Jersey, you're going to continue to see us open stores. Cultivation and processing. This is obviously a critical component to make sure that you actually have product to sell. And we're making sure that in the various states that we're in, we're building to what the state needs to have. So in the case of Vermont, we're not overbuilding. We have a couple thousand square feet. In Florida, which is one of the largest markets in the US, especially in this sector, we have one of the largest grow campuses in the US. It's 33 acres, a 200,000 square foot building, as well as outdoor capacity, which is another 80,000 square feet. We're building for what we believe that market should be and continuing to do it in a modular way. Excuse me. Product distribution. Even though we have 68 dispensary licenses and we have 21 open right now, it's not just about getting product on our own shelves. I think this slide is actually the most important one that we have in our presentation, because this is showing that the products and the brands that we're building as a company, we're not putting them just on our own shelves, we're getting them on other people's shelves. You look in Arizona, our MPX brands, right now are on 20 different 20 other dispensary shelves across the state. So that means we're going to other multi-state operators, other competitors out there, and they're buying product from us. In Maryland, we almost have 90% penetration on our competitors' shelves. We've only been open in Maryland for 6 months. We've already been able to build those types of penetration rates. Massachusetts, it's about 30%. That's going to be one of, obviously, the biggest markets on the East Coast, especially as it's all going full recreational. And then in Nevada, very similar profile. We're on the shelves of all the big players out there, whether it's guys like Planet 13 or some of the other large operators. And we're going to continue to use this as a Trojan horse, getting products on their shelves and continuing to build up that penetration rate, because we think that's absolutely key for building a national brand across the US. On the MPX side, this is one of the sort of core brands that they have. As I mentioned, they have this distributed on over 100 competitor shelves across the US. This is just a sample of the products, whether it's extracted products, live resins, cure resins, quite innovative. And typically in a lot of the states that they're in, they sell at a significantly higher price point than a lot of competitors. They're well known on that front. We had recently announced CBD for Life, which is a national CBD platform in the US. They have a product set of pretty close to 50 different products. They're in 750 different doors across the US, recently featured on Good Morning America. We recently announced as well that Urban Outfitters on their lifestyle side is going to be carrying our products, and you're going to continue to see more and more announcements as we build the number of retailers that we're in. As I said, it's around 750 right now. In the case of Urban Outfitters, they have close to 250 that they're piloting us in. You're going to continue to see that number ramp up. So as I look at ourselves or whether any of our peers, I'm sure a lot of you saw the announcement around Canopy and Acreage. There's a few players like us out there right now. As a company, iAnthus, we've just closed our transaction a couple months ago with MPX, and this is how we kind of sit as a combined company. We look and feel very similar to some of our peers out there, whether it's in terms of the number of states, whether it's in terms of revenue for 2018. We all are in the same states. We have a very similar profile. And I think the only one where there is a really stark difference is on the discount level in terms of where we're actually trading. I think a lot of this is the function of we haven't even reported one completed quarter as a combined company. And I think as people start to see this national platform that's come together across the entire company and looks and feels very, very much like any of our peers out there, the same peers that are getting attention from Canopy, that are getting a premium, that are trading $3-4 billion. We're at a significant discount, and we believe that this is a gap that's going to be closed. So once again, just sort of wrapping up in terms of top tier size and scale, you'll continue to see us build out our platform across the US. We see a tremendously huge growth opportunity in the US. That's on the product side, on the brand side, on the footprint side, and we're going to be attacking it from all angles, whether it's CBD, THC, from our own dispensaries or wholesaling to other guys. We'll continue to make sure as a public company we're fully transparent in terms of good governance and making sure that our shareholders and investors know what we're doing. And then lastly, in terms of the management team, we started off as a team with 30 or 40 people just sort of 2 years ago with 520 and continuing to scale up. We believe that we have the right team in place, not just to manage that, but as well to build brands across the US. So, any questions?
For the Urban Outfitters deal, which product line specifically? Is it the topicals or which lines?
Yes, so it's mostly the topical side. That's the ones that they're trialing. Yep.
So with the new CMO in the seat, can you discuss a little bit more about the planned rollout for one banner across the storefront, and then also how you plan on building out your house of brands, whether through organic processes or M&A?
Sure. So I think, so first off, question around our CMO. I think job number one for him and anyone who's followed our story has seen that given that we've acquired a lot of different companies and a lot of different companies with different names, job number one for him is getting a harmonized banner, a harmonized name across all of our retail dispensaries. We think that's absolutely critical. That's something month that's going to be publicly announced. He recently started about a week and a half ago. He's already been working on this for a couple months before he's joined, so that will be in the next month or so. And then in terms of the house of brands, I think that, well, we'll have some core brands. Going to try to build out 25, 30, or 40 brands. It's very difficult, and the marketing dollars to get one brand off the ground can be expensive. We're going to make sure that we're sort of focusing on some of the big core customer segments out there. MPX tends to be an early adopter type of brand, and that's how we're going to continue to focus on that part of it. On the CBD side, you'll see us with a couple new brands that have already been worked on, and then there's going to be a little bit more, some more mainstream brands that we'll be using on the product side. But I don't think you're going to necessarily see us having this tremendous amount of brands that's expensive to maintain. And then lastly, just around brands, I think California, I think obviously that has been something which has been ground zero for brands, and it's been sort of a tremendous it's created a tremendous amount of brands, and I think that's going to be a focus as well, whether or not on the acquisition side, that we pull in a great California brand and start bringing it across our platform. Yeah.
First of all, congratulations and keep up the great work. Happy investor.
Thank you.
Can you share any perspectives as you look at your brands as they move out of kind of your footprint from retail, commercial models, deal structures, obviously lower margin as you pass that through? And what are your thoughts on taking some of those brands global out of the U.S.?
So first off, I'll tackle the last one, just around sort of taking them global. I think right now it's just getting them across the U.S. That's obviously going to be, I think, the core focus. And as we've built a brand, or there's some real brand equity in it, I think then we'll start looking internationally how we want to get it out there. But that's not necessarily in our line of sight right now. So it's on that side. Trying to remember some of the...
Take the brands, reselling, relicensing.
Oh yeah, exactly. So it's interesting. It's sort of state by state. Obviously, when you're selling at wholesale, yes, it's always better if you can get it through your own doors. But some of the wholesale pricing that we've seen, and we're still seeing some pretty decent margins on the wholesale side. Just for instance, in the case, and this is probably the most commoditized of product, in Massachusetts right now, we are selling our own flower to some of our competitors. We're getting $8 a gram on the wholesale side, US dollars. So that is still pretty healthy margins that you're getting from that. And we're always going to, even though we're promoting a brand, we're getting it on other people's shelves, we're going to make sure that we have stuff on our own shelves first. That's obviously the highest margin. And then but again, we're trying to figure out how we build out our platform so that we can kind of service both. But as we continue to see our margins sort of growing, we're going to see a blended margin where we hopefully with the target EBITDA margins in the high 30s. And as you start to see the two companies come together, you'll start seeing us give some direction around that.
Hi, I'm Karen from New York City. I'm wondering, because the New York and New Jersey markets are moving slower than anticipated in terms of legalization, and I know that I personally feel like the black market is thriving, like it just owns the place, and I think that your challenge in those markets are extra strong. Do you have any particular strategy, especially now that New York and New Jersey are moving much more slower than anticipated?
Yeah, sure. So, and just to give some context around that to the rest of the audience. So it looked like New York first was, Governor Cuomo was going to put it in his budget in April in order for full legalization and full recreational in New York. Couldn't get that into the budget. It's probably going to be 6 months or 12 months delayed, but he said it's inevitable. And then in New Jersey, they tried to get it passed about 6 weeks ago. Governor Murphy just said this week he's going to try to get it passed in the next couple months. So in some view, we'll see what happens over the next 6 to 12 months, but we're optimistic that's the way that it is going to go. In this industry, we found on the regulatory front, everything takes a little bit longer than necessary. We're making sure that we're continuing to build out cultivation and build out our platform to meet what's going to be, we think, inevitable, which is full recreational. But then to address sort of at the black market or on the black market side, I think when you look at almost any single state that's went full recreational and that there's good product on the shelves, you start to see the black market naturally driven out. It's expanding the potential consumer base out there. You look in the case of Colorado, it's probably 85-90% of a legal market. New York City, obviously the biggest black market on earth. And that is hard to compete with in a lot of cases. But we think that when there is the product selection and there's product consistency and attractive pricing, right now the pricing in New York with a lot of our peers is still very high. They're not even trying to compete with the black market. I think as people get bigger facilities and can lower their costs and sort of compete with the black market, I think you're going to see it be a real threat.
With you increasing your dispensary footprint over the next year pretty aggressively, what kind of expectations do you have on a square foot basis for sales in your dispensaries over the next 12 months, 24 months, and what do you see like the high end being for a square foot sales per square foot for your dispensaries going forward?
Yeah, so again, there's obviously some nuance sort of state by state. That hasn't been guidance necessarily that we have published. So it's not something that we've come up with kind of a firm public answer around. What we've always been focused on, though, is we want to build out dispensaries that are geared towards delighting the customer. We're not focused on building very small dispensaries that are cheap and quick. When you're building something, we're building it to last. And you're going to start seeing us, generally, the dispensaries tend to be in the range of 2,000 to 4,000 square feet so that they can be really sort of hubs and service, whether from a delivery perspective or from a community perspective, that are going to be very competitive with anyone else specifically out there. But it's not something that we've necessarily put together just yet, and it's going to be one of the metrics that we continue to look at and sort of publish in the future. So, okay, thank you.
Thanks, Julius.